Happy to be here today with you, Steve Saptel, Life Sciences and Healthcare Deal Advisory and Strategy Leader. Very excited today to officially launch our 2022 Investment Outlook paper. This paper is based on deep global insights, as well as surveying over 300 executives across the healthcare and life sciences subsectors. With that, we remain very bullish in M&A for 2022, citing some of our survey respondents indicating the low cost of capital, as well as the board's continued interest to deploy that capital. 2 points of interest from the survey. Over 70% of the respondents indicated that they're going to increase their M&A activity this upcoming year, and over 50% of the private equity investors indicated that they're going to do over 10% more volume. Now, however, the pandemic is still here. It's causing disruption. It's also causing uncertainty, and it's also coupled with the fact that we have limited, highly valuable assets in the marketplace. With that, though, we see that this is an exciting time in the M&A market. And in our investment outlook paper, we looked at and researched over 9 subsectors. And today, I have Kristen Pothier, our Global Deal Advisory and Strategy Leader, and Brett Glover, our Healthcare Leader, today to share their perspectives on what they're seeing within healthcare and life sciences. So with that, what I'd like to do is turn it over to Kristen. And Kristen, ask you what you're seeing with specifically in the life sciences biopharma services space and what you expect to see there.
Sure, Steve, thank you. Let's start with biopharma. In biopharma, we're expecting to see a real race and a real competition for early stage, very innovative assets. There's not a lot of late stage left out there to acquire. And so therefore, companies are really looking for that innovation to bring it forward into 2022. In fact, when we look at our survey of worldwide respondents, that is the number one concern that they have, is that early stage assets are not going to be enough, and there also isn't enough late stage assets to go around.
And with that, Kristen, and kind of the year that you've seen so far, what kind of new deal structures are we expecting to see? And is there any sort of innovative structures that might be different in FY22?
Yes, there's a real mix of acquisitions, creative financing, partnerships, a lot of try before you buy. And the reason for that, is when we're looking at the different therapeutic areas that we're looking into, it's still oncology, immunology, neurology, and rare disease. If you look at the past couple of years, cell and gene has been something that has been very popular, very innovative, and very exciting for all of our large global biopharma organizations. However, in 2020 and 2021, we saw some of the bigger acquisitions go for a little bit of a concern on safety considerations and in their cell and gene assets. And so therefore, companies are now looking to better de-risk. And so that creative financing with the deal milestones to go along with it will allow them to do that.
So having said that about the deal structures, what sort of headwinds might we expect within life sciences?
Sure. After the deal is done, the integration challenges continue to be more and more complex. When we're acquiring an innovative target, we have to acquire all of the brain trust that goes along with it. The people strategy that you bring in to keep that innovation and keep all of that management team going on their innovation is something that's really important. And that is just the beginning of our integration challenges. Another thing that we're seeing that is a little bit of a headwind that we're concerned about is the FTC really focusing on drug pricing and different regulations as we move forward.
Well, I think it's quite interesting to hear about the headwinds and excitement. You talked about some of the other innovative assets and some of the other disease types. If we pivot a little bit and we think of the diagnostic space, what are we expecting to see there this year that might be different than FY21?
Sure. Diagnostics and lab services continues to ride the wave of the outburst of COVID testing that's needed worldwide. And what our diagnostics companies and lab services companies have done is they've taken their COVID cash, some of it billions of dollars more than has been expected in a normal year, and they're deploying it to more innovative assets that have nothing to do with COVID testing. It's more molecular testing, it's more liquid biopsy, It's really looking at innovation and diagnostics to take them beyond COVID overall. The deal volume outpaced 2020 by 60%. And so this particular sector continues to flourish. And another thing that we're seeing in terms of trends is a real focus on merging of ecosystems. So diagnostics companies buying lab assets buying diagnostic kit companies so that they can better provide pharma and our patients worldwide with the ubiquitousness of testing that's needed.
Well, clearly an exciting time within life sciences, and thanks for sharing those perspectives, Kristen. I'd like to maybe pivot quickly to Brett, and maybe Brett, have you start with what are you expecting to see within healthcare this upcoming year?
Yeah, thanks, Steve, and great to be here. So the good news is healthcare M&A is going to remain very, very active in 2022. If we start with our health systems, we expect our larger health systems to fare pretty well. And unfortunately, for some of the smaller health systems, we think there's going to be more pressure for them to go ahead and merge. We see vertical integrations, so basically hospitals buying physician practices, ASC, urgent care to continue. And we'll also see joint operating agreements, partnerships, and service line agreements to increase as their speed to accrete value is often quicker than M&A. On the bad news, we don't see prices coming down, at least not in the first part of 2022. Private equity is going to continue paying high multiples and have to implement their value creation strategies very, very quickly. But because of those prices in certain areas of provider sector, we expect to see more partnerships, just trying to avoid the high price of M&A. The last thing I'll leave you with, Steve, is our respondents said the areas that they expect to be very active are behavioral health, risk-bearing providers, and of course, healthcare IT.
So you talked about some of the areas for potential growth. Are there other headwinds that you'd want to share in anything that we saw coming out of this outlook paper that we developed?
For sure, the largest headwinds we see are going to be inflation and labor. So between Omicron, staffing shortages, and then labor pressure on price, we expect to see some pretty big headwinds for certain provider sectors.
You know, Brett, I think this last year and since the pandemic, we've seen the way healthcare services are provided to us has changed forever. What do you see with respect to healthcare IT and telehealth? How do you see the growth there this year?
Yeah, I'm not sure how much will change, but I do know that our respondents believe that prices for healthcare IT assets are actually going to be up. 75% of respondents believe that. They also said the areas that they find the most interesting are going to be telehealth, electronic medical records, and clinical workflow solutions. If we think about a lot of those solutions help with some of the labor shortages we've seen.
Well, I think we can all say today that we are very excited about the 2022 M&A marketplace. We're very bullish on it and look forward to working with many of you. And we certainly encourage you to read this investment outlook paper and have a great rest of the day. Thank you.